following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 6th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Thursday. Let's make sure that you and I, that we do everything we can to have a fabulous weekend, a fabulous Friday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We make that one little shift, folks. It makes all the difference in the world because it means that you and I can find the gift in every set of circumstances. And today, we're going to go take a look at all those circumstances out there. We'll try to gauge where these markets are going to, whether it's the futures market, whether it's commodities, whether it's currencies, anything that you'd like. Of course, I'm absolutely grateful for your presence here this morning. I'm here to serve you, so feel free to call in at 877-927-6648. Internationally, you can also reach out to us at 727-445-1044. This is Fantastic Friday. Of course, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Lots to talk about here this morning. Job numbers out as they are each and every Friday, the first of the month, every first of the month Friday, however you might say that out there. And so they're out. We'll take a look at the market's response. Right now, you've got Dow futures. I think they're up maybe about, 60, 70 points? Let me see. They're up 61 points right now. S&P up almost 7 points at 2,061. NASDAQ up 10 points at 4,257. Russell up about 3 points. The king of beers, the king of dollars is on the move, up 543 ticks this morning, trading out at 94.28. We've got movement in the currency market. We got movement in the gold market out here as well. The hard currency market. It's off $23, of course. It's moving in the direction that was really anticipated. Just taking a look at that initiation move by the full moon a couple of days ago, as well as by looking at last Friday's commitment of traders data out there, those large commercials, that so-called smart money, moving up to levels of net short as a percentage of the open interest to levels that we haven't seen for quite some time. So looks like the smart money got that move right. Silver's down 40 cents right now. It's trading at 16.79. A quick peek across the globe out here. Let's go see what we've got going on over in Europe this morning. The DAX is off 54. The FTSE is basically flat, off 3 points out here. In Asia last night, a bit of a mixed bag. The Nikkei was up 143 points. Hang Seng down 86. That was 0.3%. And the Shanghai off nearly 2%, down 63 points. Okay, let's go check out our markets. So where do we begin first? We'll take a look at, let's go look at the ES Mini. Let's go take a look at it. Let's look at the daily charts out here for each of these indices, for each of these future contracts. So here's the ES Mini. Key level that it's trying to deal with here this morning is 2,062. What's a 2,062, you say? Well, if you look at the, come on, work for me, would you? Good Lord. I got a cursor issue. I'll just reset things at the next break out here. It's basically the trading session of January the 8th out here. No, January the 9th. That's the swing point. You can see that blue horizontal line going across my screen out here, 2,062. This is a level where price has found resistance before. So this is really, there's two key levels, in my opinion, where a fight takes place today. We'll see who's going to win. I can't tell you whether it's the bulls or whether it's the bears out here. But it's at the 2,062 level. If you see a close above that, that says that the market's going to go ahead and make a run, or the ES Mini at least, is going to go make a run for its highs. In fact, I'll say one better than that. It's not going to just make a run for its highs. It's going to go ahead and take out those highs, and it's going to move much, much higher. So that's what's going on inside the ES Mini. Likewise, to the downside, if we see a move today below 2055, I believe is the number, 2055, at any point in time, a close below that, that says that this area of resistance, this horizontal bar, this catapult, that's not a catapult, it's a pole vault out here, this pole vault level that's got to be cleared will have failed. And the bulls ought to just kind of go run for the hills a bit out here. So anything below 2055, quite frankly, could actually send the ES Mini all the way back down towards its bottoms again out here. 1988. This is taking a look at both sides of the trade out here. So the key numbers, 2062, 2055. If you keep just those numbers on your pad of paper and you watch that today, you will do very well in these markets. Use that for your guidelines out here. So that's what's going on inside the futures market. And we'll kind of just because I only have an hour, we will go ahead and take a look at, try to run through in a logical way what's going on in the markets. We can take a look at the other futures contracts, but I say just we'll keep it simple. We'll just take a look at the S&P futures and use that for your gauge, for your guide out here. Now let's go take a look at Goldilocks. Let's take these one at a time. What do we know about gold? Well, this chart up here that's on my screen, we take a look at gold. This is the full moon initiation move. Works better than anything, not anything, but works better than nearly anything that I've seen out here in the market. I can't tell you why it works, but what I can tell you is that it does work, and it's working its magic again right now. Now, here's the key. I'm going to go ahead and take the retracement levels off of my system. Well, I'm going to turn them off. I'm just going to hide them. Give me a moment just to turn that off so I don't have to go back there and redraw it. Fibonacci. There we go. Okay. So now here's the gold chart. The arrows identify days when a full moon occurs. And for whatever the reason is, it's an initiation move. Now, what we are also seeing, let me turn it back on again. Gold has gotten down to the 0.382 retracement from the low to high out here. So from the low of 1130 to the high of 1307. So that first level, 1240, has been hit. Now, it has friends. It's the 1240 level. Friends with regard to this, this so-called descending price channel. Now, the top of the descending price channel, I'm cool with. The bottom, I'm not so sure just yet because we really don't have, to a certain extent, 3 points of contact. You like to have 3 points of contact, but nonetheless, it's a pretty decent descending price channel. If price breaks below that, it just means that the bottom line that I've got drawn in here isn't in the right place. It doesn't mean anything more out here. So what really has the meaning, I believe, for gold bulls out here is really paying attention to these Fibonacci levels. Now, gold is moving down into the 0.382 retracement level with a wide-ranging bar. Never good, but the day's not over. This is a daily chart that we're taking a look at. I would say that any cracks of this armor, so let's not pay too much attention to the bottom of the descending price channel out here, although it could very well act as support. But what we want to do is watch that 1240 level, because any move below 1240 with any kind of significance, that says that you should see gold make its way back to about the 1198 area. Now, what's also nice about this, where it's trading right now, is this is the B point of where gold broke out. This is the December 9th high as well. So December 9th high was 1239. So far, intra-session, the low has been 1237. So it could very well be that this is the extent of the move lower in gold. I don't know. It's an initiation move, and you've got to be very careful. Now, the bullish side for gold is that this is it. This is the move lower. Not that it really reverses course here today, but this is it. You start to see some small bars Sunday, Monday, maybe Tuesday, and then you've got a large A to B equals CD to the upside that could unfold. But it's not looking like that is really the action Jackson that we're looking at inside of Goldilocks. So that's what's going on inside of gold. I normally don't cover the treasuries out here, but I'll go ahead and I'll give you a nice little morsel, just like I'll be giving some really important morsels of information this coming Wednesday. This coming Wednesday, I'm doing a workshop for all of my subscribers. Now, couldn't be easier to become a subscriber to Mastering Probability. All it really takes is for you to go over to the homepage at TFNN.com. You do it for free. There's no charge to your credit card, anything along those lines. It just takes a little bit of effort. You're putting in your email address here, and you're going to get access to Wednesday's workshop, about 5:30 to 6:30, where I'm going to give you morsels of information, pieces that you can use actionably, that you can use for the rest of your trading career. The rest of your trading career, because these are patterns. This is all about, look, I'm a pattern recognition, we'll call it specialist. All right, that's really what it's like that in life. It's like that because in trading these markets, it's really all about life out there. That's really what it's all about, is recognizing these patterns. And so I'm going to show you a pattern. This is not anything I'm going to cover on Sunday, but I would like to. I'm going to cover on Wednesday, but I would like to see you over there. It's never been easier. Don't know that this opportunity I know this much. This opportunity will not come again. So you want to get over to the homepage of TFNN.com. You want to sign up for the newsletter service that gets you free access into the workshop. So here's a morsel of information for those of you that trade treasuries. Now, most of you know that I like to use as my momentum indicator. One of the momentum indicators is the relative strength index out there. Now, what I have on my screen out here is actually a 14 period with a 3 smoothing average stochastic. And in this, actually, the two of them, I'll just show you. The two of them, the two as an indicator, they correlate about 85% of the time out here. So let me go ahead and what do I want to do? I want to go ahead and add an indicator, right? So let me do this here. Where do I insert study? So if I go ahead and I put in the relative strength indicator, I'm going to do this. I say I've got a couple of moments, but let me just do this. That'll show up at the bottom. And this tool here, they correlate directionally everything about 85% of the time. When it comes to the 30-year Treasury, though, the better tool to use to identify divergences happens to be the stochastic, more so than the RSI. I can't tell you why, but I know after watching it for a number of years that it just does. And so that really means that you should as well. Now, I'm going to go ahead and get rid of it just to simply, because I'm going to show you, many of you who are watching this on Tiger TV, you already see what it is that you're looking at. You know, divergence is a real key and helpful tool to help you understand when price has just simply stretched too far in the wrong direction. Now, you can't use that as the timing tool. You have to use other signals. A to B equals CD patterns, Chapman wave counts, bearish reversal signals. You know, there's all kinds of tools out there that you can use. And if you take a look at this chart, now it's a continuous contract I have up here on my screen, just simply so that I can show you the number of different divergences that occur and what takes place. And those are the red lines. In the case of the red lines, with regard to the price level out here, you can see price moving. Now I've gone back to December 2013. So you can see I've gone back, you know, a good year plus for you to be able to take a look at this. And so you can see prices moving lower. What was happening to the bottom of this 14 period with the 3 smoothing average, a stochastic out here was making higher lows. Right? That was a real indicator. What happens? The bonds actually finally made a low back in December 2013. Then all of a sudden things start getting stretched too much here. And this stretch was back into February 2013. You've got price moving higher. You've got declining tops inside the its oscillator. What do you have back here? You got price moving sideways between June and July of 2014 with regard to the bottoms. What do we have with regard to the 14 period stochastic out here? Making higher bottoms out here. And it is the divergence. It is the divergence of what the stochastic oscillator is communicating to us that really gives you that information. It works really well. So if you are someone like Oda Nobunaga who trades bonds in the Tiger's Den, you want to make sure that you go ahead and you add this indicator out there. So that's Friday's freebie. Hey, that'd be kind of cool out there. That I have for you. We get back, we'll go take a look at the rest of the markets out here. Maybe we'll even give some price projections, because if 2055 doesn't fail, 2069 is where the ES Mini will head to. This is Steve Rhodes. This is TFNN. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Leading the charge, the upside in the pre-market this morning. You got LinkedIn. They were out with numbers after the bell yesterday. Closed at 237. Nice pop here this morning. Trading out at 264. You've got Terrace Corp. HRS is the ticker symbol. They closed at $69. They're trading right now at 76. You've got the Lexus XLS. The XLS, what am I thinking? That's the after the dot on your spreadsheets, isn't it? In any event, the Excelis Inc. Closed at $17. It's trading at $24. That's a heck of a nice move out there. Let me see. Is it going to be bought out? Pre-tax cost synergies. Yeah, Harris is buying them out. There we go. Hello. Hey, you got Twitter. Twitter moving to the upside. It closed at 41.26. It's trading out at $46 right now. To the downside, struggling this morning. Yelp is yelling. They closed at $57. They're trading at 47, so that's down nearly 20% here. Less than 20%. I don't know, 18%, something like that in the pre-market. GoPro closed at $54. That's trading out at 47 right now. You got Pandora Media, ticker symbol P, at that close at 35. Holy Toledo. Anyways, this has been cut in half. Closed at, I was looking at something else. My apology. Not cut in half. Closed at 18.41. I was looking at the junior nugget. Closed at 18.41, trading at 14.90. Hey, that's not exactly a small decline out there. Anheuser-Busch, this bud is for you. BUD is a ticker symbol. Closed at 124. It's trading out at 121. Okay. Let's take a look at what's going on in the currency market out here. If we look at the euro Japanese yen flat basically at this stage here. So if this had sold off, if this was selling off hard, and our S&P futures had popped like they have, I would say we've got divergence there, and the currency pair is the one that would win and would be pointing the way. We don't see that out there, so we don't see, so with regard to the pop and drop, we're not seeing that at least inside the currency pair out here. 2062, no question about it, is going to be a key level to watch. But if you catapult that, then you've got much higher price. Now the 2069 area that I gave you, that was just using that was just the first level, the first area where price would get to. We'll go back and take a look at that. But you got the Japanese yen. This has got a big move on it this morning. After I'm assuming that this is after the jobs report, although I wasn't paying that close attention. Now it has been consolidating as well, much like our markets out here. But this is moving higher. If we take a look at the move in the euro out here, the euro itself pulling back here this morning. But again, not pulling back to the standpoint of trying to bust out the lows, just simply moving sideways out there. So currency-wise, that's where you're seeing the big move inside the U.S. dollar index. If we take a look at that, this is a 10-minute delay on it, but it's trading right around the 94.50 level. So the U.S. dollar index volume so far in this about 30,000 contracts out here. That high's got 57,000 contracts from January 26th. We've covered gold. If we take a look at light sweet crude, it's up about 69 cents as we speak right now. Light sweet crude is tempting. It's trading right here, right at its market profile resistance line. A brand new TAS box that popped up here this morning, and that's at the 5104 level. Bears want to see it close below it. Bulls want to see it close below 5104. It's trading at 5115 as we speak right now. Let's see. So we kind of covered the currencies, covered commodities. Didn't really take a look at silver, but let's go do that for you. Let's take a look at where silver's trading in relation to its retracement levels. So let's go see that. We know that gold was down at the 0.382 retracement. Silver the same out here. So silver, the 0.382 retracement number on that is 1683. Of course, we know that silver had a big wide-ranging bar to the downside. That was on January 29th. That low out there is 1674. You crack below that, that sets up your A to B equals CD pattern to the downside. That pattern here, if we take a look at it now, when we go back to gold and we go back to the euro out here. By the way, the 1-to-1 inside of silver takes you in that $15.81 to $16 level. That would be your 1-to-1 A to B equals CD. Back to taking a look at gold. The real breakout in gold stemmed from the euro, in my opinion, more so than the dollar. I wish I had. Tom's got the ability to pull up the chart and take a look at gold priced in euros out there. Of course, with the euro pulling back here this morning and gold not, you got to say, something to think about. In any event, let's take a look at, when we get back from this break, we'll take a look at how things are going to pop, whether they're going to drop. The line of demarcations, they're already out there for you. So that's all you got to pay attention to. 2055 in the ES and 2062. Any close above, well, either of those is bullish. Any close below 2055, then get ready for the next roller coaster ride down. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 13 points. Trading at 17,872. S&P is flat. It's trading at 2,063. Composites flat at 47.64. Russell 2,000 flat. It's all flat. Nobody is out of the gate just yet. Lead the charge. The upside, it is LinkedIn. LNKD up a nice $25. That's up 10%. Let's go check in on LinkedIn. Get a feel for where it is trading at. So gaps up this morning. We won't be paying attention to the volume. This thing here had broken out recently. This was back on October 31st. This had a nice move up, about 6.9 million shares, I believe, on that trading session. Price came back and tested the gap out here. It didn't get all the way down to the bottom, but it was pulling back with about 1 million shares, 1.1 versus a breakout of 6.9. Yeah, no wonder this thing held, and now it is off to the moon. We've got to put this on a weekly time frame. system here a bit slow as everything gets downloaded. Man, I hope. Now, if we take a look at the A to B equals CD, ooh, this is a doozy out here. On the weekly chart, September 8th, the week that began September 8th, 6.4 million shares. You've already done 9.8 million shares this week. So that B point taken out with a wide price spread, accelerated volume. That says that the first target on this, come on, work for me, work for us. Come on. Come on, baby, work for us. Give me the A point. Give me the A point. There we go. There's the A point. We're going to use this as the B out here. And then we got good old Mr. and Mrs. C. That's going to give you a price projection up to about 283.87. I would say 283 to about 310 inside of LinkedIn, LNKD being the ticker symbol. We also got Buffalo Wild Wings, BWLD. They're out with numbers here before the bell. Revenues of $409 million versus $341. Net earnings $20 million versus $20 million, so not killing it on the bottom line, but doing pretty good on the top line here. In the weekly chart, nothing bearish about Buffalo Wild Wings out here. This could be a very large A to B equals CD pattern to the upside out here. Yeah, this may already be formed. Let's see here. The A point, or the November 18th, the week began November 18th, that had 1.9 million shares. This thing was taken out with 3 million shares. So there's your confirmed A to B equals CD. And then you have a swing point from February 2014. That had 7 million shares. Now was tested with 4 million shares. So you got really a couple of confirmations that what Buffalo Wild Wings wants to do. Let's go check out its A to B equals CD pattern out here. We're going to use the A point down here back in December of 2012. B point out here in November of 2013, and then February 2014, as you see. So Buffalo Wild Wings on its way up to 205.78 or so right now, trading out at 190.44. To the downside out here, we got Rent Track, R-E-N-T is the ticker symbol. I don't see anything unusual here in the notes. Looks like maybe they were out with numbers, but I don't see what those are. Bottom line is, boy, this stock chart on a weekly basis, this is nasty looking, is it not? Yeah, most certainly is. So this thing is coming back to a breakout that began in January 2013, the week of January 13th. This equity here broke out with 1.5 million shares, so not your most liquid. And even with the wide-ranging bar so far, about 920,000 shares on the pullback out here. So this equity ought to pull back to the price point of about $36. It's trading at $49 as we speak right now. That's, again, taking a look at the weekly chart. To the downside as well, you've got Yelp, Y-E-L-P. That's off $10, nearly 19% here this morning. This thing is now moving below a B point, a weekly B point. 49 million shares. From May 5th, 2014. You're only at 14 million shares today. Let's switch over and take a look at the daily chart, see what kind of volume we've got coming out of Yelp here. This thing also should have support. Let me see, before I do that, here's where the actual breakout began. Let's just mark this on the weekly chart. We'll switch over to the daily. So there ought to be, this is pulling back to the breakout area that began at about $40.31. Y-E-L-P is the ticker symbol. Haven't used it, so don't even know what to tell you about Yelp other than the fact you've got two gaps to the downside. Boy, this had a big one back here on October 23rd, 27 million shares. So 2.7 million shares in the first 8 minutes of trading. Doesn't look like the weekly is going to be taken out with volume. But nonetheless, I'd say that 40-31 area is likely where it is headed to, and we'll see what happens should it in fact get down to that level. Let's take a look at GoPro. GPRO is a ticker symbol. This is down 13%. Looks like the market has fallen out of love with GoPro cameras. Not the videos that they produce, but with regard to the stock chart out here, wasn't that long ago, in October, when this thing was up at $98. This has been a haircut of more than, about 50% as we speak right now, just under 50%, trading out at $47.22 out here, trading against its TAS market profile support level. So any close below this, any close below the swing point from January 16th that had 10 million shares, does not bode well for GoPro, GPRO. To the upside out here, we got Twitter, TWTR is the ticker symbol. That's up a nice 12%. That's up $5 and change. Twitter gapping up this morning. Now, Twitter gapping up. We took a look at this yesterday. I believe it might have been, I can't remember how we looked at it, why we looked at it. Could have been someone in the den, could have been a caller out here. But we did take a look at it yesterday. And what we noticed was that Twitter was moving higher with volume above a B point of an A to B equals CD to the upside. That was the January 12th high. What we said was that it was likely that Twitter was going to go ahead and run into a wall of resistance right here at the downdraft that began, or that took place on October 28th. There was 83 million shares there. Now, Twitter's got 22 million shares to the upside and only what is this? Only 10 minutes of trading. That's some pretty good volume behind this move. If Twitter closes above 47.18, that line of supply will be whoosh, gone out there inside of the Twitter world, all within 160 characters, and that would bode well. That would be bearish. Otherwise, if that becomes a resistance level, then maybe you're looking at some kind of a consolidating pattern. TWTR is the ticker symbol. Let's take a look at, let me go look at some long-term stuff, a little bit longer-term stuff, as we come to the close on a week. Here's a weekly chart for the Dow. Now, as we take a look at the weekly chart for the Dow, you're taking a look at the horizontal lines going across my screen. You'll see green and red. Green are weekly, red are monthly. These are the horizontal trading range boundary lines. These were programmed by the group over at Traders Formula Consulting. If you're an eSignal user or subscriber, you really should go over their site and check it out. They have this amazing set of tools. What they've done is they truly are the artists, the Picasso artists out there, where they've taken the great work, they've taken the good work of others, and they've made it greater. I know that's probably really, my English teacher probably throw me out of class for saying something like that, but they have made it much better. How about that? I don't even know, much better is probably also not so good. I might get a A+ for the not so good piece of it. But what we do know, these are great tools because you can test drive their service for like 30 days or something. So it's a great deal. And you can get access to these horizontal trading range boundary lines. And they are so helpful, so important in giving you ranges as to what the market is doing out there. So this way here, if we take a look at what's going on inside the Dow broke through its weekly horizontal trading ranges. And all these are horizontal lines of significant support and resistance out here. And they work their charm. And price got above in the weekly basis, the week that began October 27, 2014. And the Dow has come back and it's tested it. It tested it back here in December 15th. That week, it tested it last week, tested it this week out here. This is a pretty solid line of support. That's the 17,171-ish area. Now, price has moved above the monthly horizontal trading range boundary line, 17,793 out there. From a weekly basis, you've got the Dow now trading into its swing point high. And this is December 22nd. The law out there is 17,812.25. Here's the deal. You close this week above 17,812.25. Chances are, odds favor, probabilities would favor that you'll go test the high out there. And that high, by the way, would be 18,103. If you close below it, then you could have a rejection of that swing point. And I don't have volume on this. We'd have to go over to the diamonds. So let's go take a tour. Let's go see what the diamonds are doing. Let's take a look at the DIA, up 16 pennies as we speak right now. What do we know about the diamonds? The diamonds here broke through the descending price channel that it was in. It did that yesterday. Volume behind the move, so-so, 6 million shares. So far today, 592,000 shares. The diamonds seem to also be headed for that swing point. But let's switch this over to the weekly chart for the DIA. Let's get a feel for what it is doing. As we take a look at the diamonds, we see that it is trading into also that swing point from the week that began December 22nd. Now that swing point, it's got 17.6 million shares. You're into it with 30 million shares today. Pretty good chance you can do 5 million shares. So we'll say you're at about 35 million. The week of December 22nd, it was the week of Christmas. So we know we had some light trading. But even if you multiplied it times 2, you'd have to say, and I think that would be a stretch. You'd say that that price is moving into that swing point with at least the same volume. I'm going to have to say it's moving into it with volume out there. And so any close inside the diamonds above 178.19 says you're going to go test the high out there. If you reject it from a volume standpoint, I can't tell you if on a weekly basis if we do or we don't because of the holiday. If we've got a rejection, you'd have a rejection of price with a close below that level, but I can't tell you whether we'd have a rejection of price with volume. Because if you're coming into a swing point, even if you reject it with the price standpoint, but you're coming in with volume, either side says, hey, you're going to move higher. So let's just make sure we use today our line of demarcation. 2055. inside the ES. Any close below that says price is likely going to move lower. In fact, will move lower throughout the day. And any holding of that area will be super bullish out here. That's what's going on inside the diamonds. If we go do the same thing that we did here on the long-term base, let's just go finish this off and take a look at the S&P 500, the SPX. We'll look at the weekly. We'll look at the monthly horizontal trading range boundaries. The weekly here have held as support. This has been tested pretty well. That's at 1986 level. Inside of the S&P 500 says that if it can take out the highs, we ought to see the price level of 2131 to 2162 get visited out here. That's what's going on inside of the S&P 500. Let's go switch over and take a look at the actual SPY itself. Take a look at that. The SPY right now, that's off about 3 pennies. So we've got a flat trading session, 12 million shares out here. Here we are. We've got the weekly chart. Again, this little spike high out here from December 15th, I can't pay attention to that. I just believe that it's wrong, but I can't get anybody to agree with me and change that. So I've got to go back to that week of December 22nd just as well, because that's the same week that we're taking a look at inside of the DIA, the diamonds. 370 million that week of December 22nd. You're at 532 million shares already for this week inside of the SPY. So any close today above 206.46 says that you go, is 206.46? No, 206. Yeah. I'll be a son of gun. Why do I have 206.26? Oh, that's a different swing point I'm looking at. So 206.46, any close above that. You're not there now. You're at 206.22. That says that you're going to go test that high as well. Hey, let's just do one more thing. Let's take a look at that IWM. I think it's the IWM where we really get our piece of information out here. Now, the IWM, the swing point that it's dealing with is that week that began December 29th out there. So also holiday-ish type of trading, 133 million. You're up into with 152, but you're into it. The IWM, in order to get a rejection today, needs to close below 117.89. Anything is possible, but if it closes above that level, what you ought to really expect is a test of the high, which is 121.41. That's what's going on inside of the IWM out there. Folks, again, I do want to remind you, not that you need reminding, but this coming Wednesday, next Wednesday, from 5:30 to 6:30, I'm going to be doing a 1-hour workshop for all of my subscribers out there. It could not be easier for you to become a subscriber. Doesn't get any easier than this. Yes, you got to go over to the homepage at TFNN.com. All right, step number 1. Step number 2 is actually go fill out the information, sign up for it. It's a 30-day free trial to the newsletter. There's no charge to any credit card, and you're going to attend a workshop that I guarantee you that if you go, you're going to be happy as anything that you want. You know, if you believe that life happens for you versus to you, and each of it, I get stories from folks. In fact, if you've got stories like that, go ahead and send them in so that I can share them with others. I can tell you many examples in my life, and none better than the golf course. I saw John Logan said he was hoping to get out and play some golf. I don't know what the weather's like up where he's at right now, but to me, nothing could be on the golf course is where I've witnessed that happen more times than not. Now, the type of golfer that I am, I tee up the ball and I play the ball where it is. I don't use the foot wedge or kick it. I count all the strokes, things of that sort. To me, that's really what the game of golf is. But I can tell you that some of my, not my best shots, but certainly some of my most memorable shots and best shots have been where, I tell you, the first eagle on a par 4 that I ever had. The first ball that I hit, it was hole number, so let me see, what hole was it? It was hole number 13. 13 at Heathrow Country Club. It's in Orlando, for any of you that have played there. And it was, I hit the ball, nice drive, and basically hooked it out of bounds. So I was like, bummer, right? Tee it back up in the fairway. And, this one I kind of smoked right down the middle. Get up there, hit the very next shot, boom, right into the cup. Now, the guys that were playing with, they were like, wow, what a great eagle. And I said, that was the absolute best par that I made. Life happens for us, folks. I eagled that hole years later, the right way. The first shot was not out of bounds, and the second shot, boom, right in the hole. Life, it happens for us, not to us. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 23, S&P is up 2. Composites flat. Russell 2000 is flat as well out there. Have a request here to email came in, said, could I take a look at natural gas? So let's go do that. Natural gas is up about 2 pennies this morning. Now, I'm going to put this chart up on my screen here. Now, let's see. Do I have this other one up? Let me see here. Let me see if I can put this up here and do. It's not on that one. Gosh darn! I guess I should have been prepared, right? I was thinking about golf, you know. Here we go. Lot to contemplate there. Okay, here's the current slide here. So here's your pattern inside of natural gas, and it's basically natural gas is following the seasonal pattern. The seasonal pattern is about 11-year study on it, and this says that natural gas ought to be finding a low sometime right around in between February 14th, maybe February 18th, somewhere right around there. So for Valentine's Day, we're in the range of where natural gas seasonally finds a bottom. Now, that gives you a range. Now you got to go find some patterns that are out there. And there's a pattern out here. So we take a look. Now I'm going to look at I got the continuous contract up on my screen. The reason I've got that is I just have more data, so it just makes it a little bit easier for me to be able to take a look at different patterns out here. Now, one of the patterns that I'm going to show you, that seventh inning stretch, that seventh wave pattern to the upside or the downside. In this case here, it's to the downside. So I've got natural gas on the continuous contract out here in a potential seventh wave. Now, if you take a look at the Chapman wave, you got either 7 or 4, both of where reversals can take place. Now, they haven't been confirmed yet. So, it may be getting close. I don't see it here just yet. We know that we've got a target range, which today is February the 6th or something like that. So you're starting to get towards that range where you might see a bounce. But if I put that other chart back up on the screen, what I really want you to understand is it's a bounce. It could be a significant bounce out here. It has in the past. But that significant bounce out here, what you're talking about is really only taking you to, some type of, then you get February 25th. So, you're looking at about, and that's based on, I believe that might be based on 2015 trading schedule out there. May not be, I don't recall. But so you're looking at that as your potential bounce inside of natural gas. What you don't have out here is any kind of bullish reversal signal whatsoever. So I would say just sit tight. Don't let the bed bugs bite out there. But if you're taking a long now, it's for some other reason, some other pattern that I don't see out here. So just simply spend some time and anticipate out there. So did I say hole 14? It's hole 13, by the way. It's a par 4 out at Heathrow. In that way, and number 13 is now one of my lucky numbers out there. A lot of people have the superstition 13 is an unlucky number. Hey, on hole 14, much more difficult hole out there on that course. Wasn't in the same round out here, but I hit a shot, screaming shot, way right into the trees. The ball sitting there amongst some branches. Moved a couple of the branches I could out of the way. Hit the second shot. It's got to go through. It's got to fade around some trees. It's got a big bunker that it's got to deal with, and the pin was in the back right in kind of a nasty spot, and hit that shot, and guess what? An eagle. Another eagle out there on a par 4. Life happens for you. I would not have gotten that eagle, only eagle I ever had on that hole out there, had the universe not wanted me to be in that other location out there. So, folks, always remember that life happens for you, not to you. I want it to happen for you in a real nice way for the rest of your life, certainly for this weekend and for Friday, and it will be happening for you. So stay tuned, because our man Tom O'Brien, Daryl Martin, the Bull Bear Binary Nadex Hour, that's going to be up next. And we got Basil Chapman. So have a great, and then Nico and Paige. You can't miss out on that show, because it truly is all about health. It's all about health. It's all about wealth. And I wish both of those for you this weekend. So have a great weekend, folks. And we'll see you Monday morning. Take care now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.